Hello everyone, welcome back. This is a recap of our ACCA F8 Lecture 5. It was on ethics. Remember, if you want to download any of our mind maps for free, then go to the website, or if you want the full course to which this recap relates. So ethics is an easy area to pick up marks in the F8 exam. You just need to know everything that I outline in this mind map. So first of all, the principles. You need to learn these 5 principles and what they mean. Number 1, integrity, and it means being straightforward and honest. Objectivity, it means that there should be no bias, there should be no conflict of interest, and there should be no undue influence. Third one, professional competence and due care, and this means that you need to act with diligence and you need to undertake your CPD. So once you're fully qualified, you need to update your knowledge by doing your continuing professional development. That makes sure that you're professionally competent. The fourth is confidentiality. So confidentiality at all times, unless it's in the public interest or you have a professional duty to do so, to actually reveal that information. For example, if they were in breach of money laundering regulations. Lastly, professional behaviour, and that means acting in all times in a way that will not bring the ACCA into disrepute. So learn those 5 principles: integrity, objectivity, professional competence and due care, confidentiality and professional behaviour. You will need to know them. The ethical threats then. The ethical threats, 5 of them plus 1 that I add on. So number 1, self-review. Reviewing your own work is the first ethical threat. Familiarity is the second ethical threat. Advocacy. Remember, advocacy is speaking on behalf or being an advocate for a client. They're an audit client. You need to be impartial. You need to be independent, so you can't speak on behalf of them. Intimidation is the 4th ethical threat. And self-interest. Remember, self-interest is where you maybe have a financial interest or own shares in the client. You can't do that. Lastly, the one that I add on, making management decisions. It's really a self-review threat, but something that comes up a lot in exam questions. So make sure that you as the auditor are not making any management decisions, like for example, appointing the financial director. Maybe the business said they need some expertise to help appoint them. Well, you can't really do that because you need then to review their work. So you need to learn those ethical threats: self-review, familiarity, advocacy, intimidation, self-interest, and making management decisions. All of those are ethical threats. You then need to understand that there are safeguards. You don't in the exam just say, right, there's an ethical threat, I can't undertake the audit. There are some safeguards and I'm going to go into them in more detail at the bottom of this lecture. So there are safeguards by the profession, such as the entry exams, continuing professional development, corporate governance codes, and the standards. So all of those seek to implement the ethical standards. In work also, maybe your employer will have codes of conduct, or indeed an ethical code. Also, there'll be internal controls in the workplace that'll try to make sure that things are conducted in an ethical manner. For the individual, well, you'll have your CPD to make sure that you keep up to date. So making sure that you are professionally competent, for example. So the question approach to this, number 1 is assess the scenario line by line. Make sure that you don't miss anything out. There'll be lots of information there, so make sure that you pick up all of the marks. Consider the ethical issues. So which principle is perhaps being breached here? Then state the threat. You need to learn the ethical threats and you need to state which of those threats there is in the scenario. And there'll often be more than one. Then you need to look at the safeguards. I'm about to go through the safeguards. Don't just go straight to saying, well, I can't undertake this assignment. Go through the safeguards to make sure that you can't do anything to undertake the assignment with the safeguards in place. And then make a decision. If the safeguards aren't enough, well then maybe you can't undertake the assignment. So, managing those threats, implementing safeguards. We look at each of the threats one by one. Familiarity. Remember, this is things like relationships. For example, it could be a family relationship or a close personal relationship. This will be less of a threat where the employee is not on the audit. So they may be an employee of the firm, but if they're not on that particular audit, well then that's not as much of a threat. If they're in a distant office as well, or a junior member of staff, all of those reduce the level of threat from this. Some of the safeguards you want to look at before saying, well, we need to remove these people from the engagement, are that we need to see if we can structure the work in a certain way so that they're not reviewing the work of that family member, for example. Maybe the family member is employed in the tax department of the firm you're auditing. Well, if they are, just don't have the auditor audit that tax area. So structure the work so they're not auditing the work of the person they're familiar with. When it comes to staffing, you must rotate the partner for a listed company. So if the client is a listed company, you must rotate the partner every 5 years with no return within 5 years. For a non-listed company, remember, there's no requirement, but it's recommended to do at least every 7 to 10 years. Can you be employed by the client? Well, 2 years have to pass. So if you were the audit manager, then you try to get the job as a financial director with a client. Well, you can't just go straight into that job. 2 years must pass. When it comes to self-review threat, accounts preparation, look for that in a scenario. You cannot do accounts prep and audit if the company is listed. So you can't do it if the company is listed. If they're not listed, you can do it. But you need to have safeguards such as different employees doing the audit and the accounts prep and reviews of all of the work. When it comes to IT, well, yes, you can advise on IT, but you can't install the system. That would be making a management decision. Other services, such as tax, for example, it can be done, but if it's not material. So you can offer tax services to an audit client if it's not a material area. Other services such as management consultancy are allowed, but you can't make management decisions. Remember, that's a key fact. Remember, advocacy, well, that means that we can't offer any legal services to our clients. It also means we can't offer share dealing to our clients. Self-interest is a key area. We can't undertake lowballing, which is offering a low fee for the work to get further work. So offering a low audit fee, thinking, well, I'll get more work through the tax department or through management consultancy. You can't do that. It's a threat because to get further work, you might try to just keep the client happy on the audit. So it's not allowed. There has to be a fee set that is appropriate for the work that's carried out. Dependence on client. Well, what we're talking about here is that it's a threat because you may have a fear of losing the income. So if it's a big client, you don't want to lose that income. You may be reluctant to report against them. So the safeguards in place here are for a listed company, they can't make up more than 10% of the fees of a firm. For an unlisted company, they can't make up more than 15% of the total fees of an audit firm. Loans to clients, remember, are not allowed, and remember, overdue fees are counted as a loan. So you can't have any overdue fees. Hospitality, so remember, this could be seen as a bribe. So maybe you're offered something from the client, you may not be able to accept it unless it's modest. So modest hospitality is allowed as long as it's to all of the audit staff members and not just, for example, the audit partner. When it comes to financial interest, for example, shares, you cannot have them. You must dispose of your shares or remove that member from the team if they have shares in the company that they're not disposing of. Remember also, contingent fees are not allowed. These are fees that depend on something else. So you can't say if you make a certain amount of profit, you have one fee, a different amount of profit, another fee. That is contingent on something else happening and is not allowed. The fees must be for the work that is carried out. So we looked at an illustration to see how all of this is applied in the exam. And that was our lecture on ethics. Make sure that you understand everything in it. It's a key area. It often comes up in the exam, but follow that question approach and you won't go wrong. To get the question approach in PDF, simply download the mind map from our website.